Ladies and gentlemen, welcome to another Independent View with your host, Lobo Tigre. Our guest of the day is return speaker Brent Johnson. He's the dollar milkshake guy. I'm pretty sure almost everybody in the financial world knows what that means, so I'm not going to rehash that. There'll be a link below to our previous interview if you want an overview of that. The dollar milkshake theory is a mechanism. It's neither pro nor con. It's simply an idea about how things work. And it has certainly been, I don't know, proven is a difficult word in the financial word, Brent, but boy, it sure seems like you nailed this puppy tight, and it's working just the way you said, for better, for worse, depending on your position. So, got three simple questions for you. Where does the dollar go next? Where does it go in the midterm? Where does it go in the long term? You know, everything else we could tack onto that. But I realize it's kind of mean of me to start with the short-term crystal ball question. You're welcome to evade but not obfuscate. So what do you think? What happens to the dollar now?
Yeah, so middle of last week, we thought, the dollar was up 5% in about a week, and we were of the opinion that in the very short term, it was kind of pushing up against its limits, and we covered a number of our short term, hedges, for lack of a better word, and our short-term strong dollar positioning. Now, we still have medium and long-term positioning because we don't think this story is over yet. But since that time, the dollar's pulled back 3, 4, 5%, just kind of depending on what time frame you measure it on.
Fantastic call.
So far, we'll see how things go, right? And it wouldn't shock me if we have a couple weeks or even a couple months of relative dollar weakness here. I mean, it's up 20% in the last year. That's a huge move for a currency. And, on the inverse side of that, the euro, the yen, and the pound are all down, 15 to 20% over the last year, which is an enormous move for a currency. I've never thought that this stuff would just go in a straight line. I guess it could. Theoretically, it could, right? You kind of have to be ready for that. But my guess is that, this is the way I described it is the famous Churchill saying that, it's not the beginning of the end, but it may be the end of the beginning, right? I think this was kind of the opening salvo. I think people kind of woke up to what can happen based on everything else that's going on in the world. And, maybe the perpetual call for the dollar to lose its value is not necessarily correct. And, some things you need to be aware of that could potentially send it higher. So my short-term view is the dollar kind of put in a short-term peak last week. I think it'll be relatively soft over the next couple of weeks to couple months. I've reserved the right to change my mind at any time. But in the medium term, I think the dollar goes much, much higher. I think over the next couple of years, you're going to see a dollar a lot higher for all the reasons that I've kind of laid out in previous talks with you and with others. But in the very long term, I think the dollar probably does go lower. I think it will have to be either artificially written down or some kind of a reset. The world will have to come together and do another Plaza Accord or a new design of the system of some kind, because at some point they're going to have to deal with all these bad debts, and whether the market does it for them or they do it on their own, time will tell. But long term, I think the dollar probably does go lower, but I think it could go a heck of a lot higher before that.
Okay, well, that was an admirably concise summary for three questions. So I find it really interesting that you're I did not know, dear audience, that Brent took some profits here on the high dollar. That's really quite incredible. I'm not just complimenting you. I think a lot of people, especially macro guys or gals, they have this big theory, but to time a market movement like this, now maybe you just got lucky, I don't know, but whatever, whether it was luck or genius,
probably.
I got to tip my hat to you there. But what I'm hearing from you, though, is basically, a fundamentalist kind of view. Like, wow, this has gone, I've been paid in advance. This has gone farther than I expected by now. So I'm going to take some money back off the table. Had nothing to do with the UK. Like, you made this decision before the UK blew up, or how did that fit in?
It was kind of that day. The pound dropped precipitously. The dollar spiked. Everything kind of went down against the dollar. And I never just look at one thing, but, gold and silver were very low. The miners were very low. Stocks in general were, I thought, extremely oversold. The dollar, if you look at the candle charts of the dollar, either on the monthly, weekly, or daily over the last month and a half, it kind of went exponential. It's a good time to bring up the fact that I've never said that this would go in a straight line. I think this will actually take 2 to 3 years to play out. And for something to take 2 or 3 years to play out, it literally cannot happen in a straight line. It means there's going to be starts and there's going to be stops. I would encourage people to use the times of a relative dollar week. I think a lot of times when the dollar starts to move down, people will say, okay, that was it, as in that was it, and it's only downhill from here. And I would until they redesign the system, I think we just end up right back where we are because of all the debt, all the dollar debt that exists outside the United States, all the U.S. dollar demand that exists in the euro dollar market. And so until they actually redesign the system, I think all of the efforts to thwart the dollar's rise is just kicking the can down the road. And they're good at kicking the can down the road. And I would not say that they couldn't do that for another period of time, but I think ultimately we'll end up right back where we are for the same reasons that we ended up back here after 2020. In 2020, the Fed was they did a very good job of thwarting the dollar's rise, and they were able to push it all the way down to 90. But rather than when that happened, rather than the rest of the world using that weakness to get out from underneath the dollar, they actually doubled down on using the dollar. And so now here we are. Even though we kicked that can down the road, or we're driving, we're back here at another high, and we're at a high. And my guess is that we'll pull back for a little while, and then we'll go on another run and make another higher high.
Okay, when you say
and again, it's really just the structure of the system.
Okay,
Yep.
I got it. So until the dollar milkshake structure breaks down, then that same mechanism remains in force, is the forecast. That's reasonable. Along the way, though, ups and downs, when you say, it may pull back for a while, is that just based on it having gone too far, or based on what's going on in the world? Or I have a very specific question for you, Brent. I'm partial to the theory, or not theory, I've seen this idea out there, that the U.S. led the way in the pandemic response, the Fed led the way in tightening, and that given that the Fed, by some measures, seems to be having some effect on inflation and the economy hasn't tanked, that the Fed will be leading the way to ease up. So it seems by the same dollar milkshake logic, if the Fed tightened and everybody else follows along, and then the Fed starts being able to, if not go easy again, but at least stop stomping on the brake while everybody else is still tightening. Europe has 10% CPI, right? Would not that tend to make the dollar go into reverse if the other central banks seem to be tougher longer?
Sure. Yeah, no question. And so that would be a time where I think the dollar would fall for a while. But again, I don't think it's possible that the rest of the world experiences growth while the United States experiences a slowdown. I think they're too intertwined for that. So while it's not impossible, I think it's pretty unlikely. But if that does happen, and if the U.S. does start to ease and eases more than everybody else, I would expect the dollar to come down, just like it did in 2020.
Okay.
But I think we would ultimately, in which case, get strong.
Sure. All right. So, but the time frame on this would be, right, the Fed gets to its terminal rate by the end of the year. So maybe sort of by spring next year, Q2 next year, we start seeing, I'm not going to stick your feet on the fire on this, but just trying to get a feel for your thoughts on the time frame for this, when we might see the dollar milkshake theory put the dollar into reverse for a short while.
Yeah, I think by Q1 of next year, that wouldn't shock me at all. I think that's reasonable to expect that. It wouldn't shock me right now. Again, if the dollar stays a little weak for a month or so, then it goes on another run into Q1. Maybe by the end of Q1, we've gone back to QE. We're in a recession, and now we have another period of relative dollar weakness. Again, this is just pure speculation. But I don't expect this to go in a straight line. I do expect there to be movements, flows back and forth. I just think each wave gets progressively bigger until we finally get the big crescendo.
Okay. Well, then rather than holding your feet to the fire on a speculative guess about the future, can you tell us what would be the signals that you would look for that would make you say, this is the time to start, that it's going to go in reverse, or this is the time when it's going to start up again? What would you look for to make a call like you just did on taking some profits?
Well, one of the things was that, I mean, on some of the momentum indicators that we watch were just really, really high. And it's really hard to continue momentum of that same level. And so we thought it to not necessarily exhausted itself, but that it was close to coming to an end. We also thought that, as we're heading, we've got kind of 6 weeks between Fed meetings, and we thought it's possible that even though we don't expect inflation to crash, maybe it could start to tick down a little bit. And as soon as it starts to tick down, then then people will start thinking that the Fed is going to relent, and so they'll start front running it. And then with the Bank of England coming out and intervening in their market, with the Bank of Japan intervening in their market, that's just kind of a signal. That would be a red flag that, hey, governments are getting ready to react. They're getting ready to do something. At some point, the Fed would probably act in sympathy with those central banks. And so, signals to watch. Now, again, it's not necessarily a perfectly defined, hey, do this, buy or sell signal, but it's certainly red flags to keep your eye on.
Okay. I have to ask the gold bug question here. Can you foresee a time when never mind the dollar milkshake theory for the world, but the dollar gold relationship changes? It's been extraordinary how tightly gold and the dollar have mirrored each other like a Rorschach blot this year. And usually it's the real interest rate. It's not usually directly the dollar. So I'm wondering if you have any thoughts on how long that might last or when that might change, and if indeed, not a short-term spike like on the war. You'll get, fear puts people into the dollar and gold, but that doesn't last. Yeah. What we really want to know, what we gold bugs really want to know, is, is there a time where, say, a dawning appreciation of the 70s on steroids here could actually cause people to chase gold and the dollar at the same time? Thoughts?
Yeah, and I do think that will happen. I'm not sure that we're there yet. We may be. Gold and silver have had a pretty good run the last couple of days. Again, I think more likely than not they are going to not trade in tandem right now. But in the latter stages of the quote unquote milkshake theory, I do think that both gold and dollars will rise versus everything else together. And part of the reason is that in the end stages, there is more quantitative tightening. Everybody is easing. It's just that everybody else is easing more than the U.S. And so on a relative basis, the U.S. dollar is rising versus other currencies, and dollars rising versus everything. And so you get this phenomenon where you could see the Dow, the dollar, and gold all rising together versus the rest of the world. Now, maybe we'll get periods of time along the way that will happen, but I think that is the final crescendo when that happens.
Well, that would be something to observe. All right. Well, again, I started by saying we don't need to beat this to death. People know who you are and what you've been saying, so I appreciate this update. Are there any other key points I haven't touched on, maybe for people beyond gold bugs out there, that you think investors should be keeping in mind right now?
Should keep in mind is that any ideas that you're just absolutely certain of, you should throw them in the trash. Don't be certain of anything. You can have conviction. You can have a high level of confidence. Don't be absolutely certain about anything. I'm prepared to be wrong on my thesis. I think everybody else should be prepared to be wrong on their thesis. I think keeping an open counter arguments to your current belief is probably going to be one of the best tools that will help you get through what's coming.
Well, those are words for wisdom that just go straight to my heart. I was thinking about writing an essay, because this is a pet peeve of mine. You have these people that they say, "Oh, we're in uncharted waters," and then they whip out their chart, right? They have this model of this theory, and they keep doing it, right? But I don't know. It seems kind of theoretical. I was thinking there was a German philosopher. Steiner, and his thing was fixed ideas, that the most dangerous thing in the world was people's fixed ideas, and that's what made people, and it's exactly that. Yep. People just like looking at this chart and stepping into the open manhole cover because they have this fixed idea of how things are. You're wrong by definition, I'm right by definition. Yep. And reality at that point just clobbers them when they're not looking. Okay, sorry. I think that's an excellent point, and happy to wrap it up. Thank you for coming back and giving us a dollar milkshake update.
Happy to do it anytime. Look forward to seeing you soon.
Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.